Hello everyone, I'm Rocky Batani from Private Lender Link. We are at the California Mortgage Association's Winter Seminar in Newport Beach, California. Today I'm joined by Nema Daghbandan, who is a partner at Geraci Law Firm. And today we're going to talk about lenders having their loans audited. So, Nema, thank you for joining us.
Yeah, thanks for having me here, Rocky. Yeah, one of the things, especially recently, we started working with mortgage funds to a great degree. A lot of them started, and it's called 2009, 2010, 2011. Experienced rapid growth, started scaling their businesses, and over time started getting concerned. Am I doing this right? At the end of the day is the fundamental question I get more often than not. And sometimes it comes in acute circumstances, right? Sometimes it's, hey, am I properly licensed? Sometimes it's, do I have the right loan documentation or disclosures? But at the end of the day, there's this deep concern, and I don't think this is unique to our industry, which is, am I compliant? Am I doing everything the way I should be doing it? And the way that this manifests for us, and the way that we really start peeling away the onions, and a lot of times for me, it's very hard to navigate a new client, because a lot of times they'll say, I just want to make sure I'm doing everything right. And I'm like, well, I don't know. Like, there are a myriad of things you have to comply with. And so the easiest way to actually break that down is I typically say, send me a few of your closed loan files and send me everything. Send me the loan application, send me every single part of the file, every email communication, because each step and each stage has its own compliance issues. Right? And it's, our law firm, we call it the vertically integrated model, but this really ties into it. What I mean by vertically integrated is we've got, a lot of times there are corporate and securities implications in what you're doing. And what I mean by that typically is, if you're raising capital, there's probably a securities component behind it. And a lot of times people take that for granted in our industry, because they say, oh, I'm lending money, right? There's no securities here, it's a loan, and it's not true. And then separately you start having things, so I run the compliance practice at the firm. And so, a lot of times there's obviously compliance issues in any loan, right? So are you giving disclosures? What's the maximum rate of interest? Are these late charges enforceable? Are these documents enforceable, right? So there's that component of it. And then there's other issues which can come post-closing, which could be problematic from a litigation perspective, which is, in your loan file, are there now red flags from a litigation perspective that you may or may not know? Are there title claims that are kind of looming in the background? And so every single loan kind of has this problem that could arise, or various problems that could arise, that touch different practices and different disciplines within the law. And so typically what I'm going to do is I'm going to just say, hey, give me a couple of closed loan files, and then I start going through a process of just kind of digging through and start peeling away at each of those layers.